everybody. You may have seen some of the tweets that we sent out and prior videos this week. Pretty impressive. What you see on your screen is what we have not talked about this week. It is the live trade room stock page, but we still have the main indices at the top. Today, we took action. You may have seen the email or the tweet that I sent out. In fact, I'll review that right now. On our Twitter account, I sent this tweet out that suggests that for traders right now, a couple things that we were looking at. Upside in Morgan Stanley, per yesterday's tweet, and Wells Fargo. But we also sent a tweet out about our current positions in the live trade room. Let's take a look at those right now. All right, so in the live trade room, this is what you see when you come visit our live trade room. You get two choices. You can flip back and forth. There's no restriction, of course. So if you're a day trader, you more than likely want to focus on the E-mini S&P type of trades that we do, right? So this went long this morning. The 15-minute model is one that we will be paying particularly close attention, especially now as we've finished rollover. We're through option expiration, the quarterly option expiration. And so now that we've gone through that transition, this is kind of a tricky week for algo strategists because, number one, we have a split of kind of volume between the March contract that some people are still trading and the June contract that we're supposed to be rolling into. So today was quadruple witching, where we get the options, the indexes, there's a big stock options, the stock indexes, the futures all expire for the March contract. So therefore, we now rolled into the June contract. So for algo trading, we should see a little bit more liquidity, some big moves, or at least our normalization. Why are we going to be looking at two models? If you look here on your screen, we have a 5-minute model, and we've just added the older version, which we had a 15-minute volume. When ATRs contract, you're going to need longer holding periods, and you can afford to ride trades a little bit longer. It may take longer for trends to mature. So in small contracted trading ranges, what happens is those 5-minute bars, just nothing. It's like this. Look in the crude oil here, and this is one of the things we were talking about. I mean, that's at the end of the day. You're not supposed to do anything. By the way, while you're sitting here with me, trade that we had in the room was this little euro currency. And yes, finally, it did exit. It's been a painful trade. We told people, you know, if you don't want to hang around with, get out anyway. This was a euro currency that got in well before the 2 p.m. As you can see, initial stop was here. It trailed the stop because price didn't change. And then why did it get out? It gets out at Globex close. It gets out on the close. So we exit before the close on Friday, so you know what. This is where we're at. Markets are still trading right now in the Globex action. What I wanted to go over and review with you was a couple things. A, we are still in a swing trade short position with the VXXB. It did not get stopped out. We are still in a long position in the spiders, and you can see that right here. The spiders and the VXXB. Short the volatility, long the spiders in the trading room on the model. A lot of traders overrode this and exited their trades. No problem. Even in for J Person Asset Management, we have managed a few accounts here, and what we've done is we trade the volatility ETNs, just like the VXXB. And for those that can't sell short, because it's a short, you can take both sides of the trade, but we take the short side of VXXB. You want to go with a long inverse position. Some people that trade on a 401k can't sell short, so therefore they have to go with a long version of volatility. So if we're expecting stocks to go up, we're looking for volatility to go down. So that's our models. That's what we've done. Let me bring into focus the SP. Now this was a pretty fabulous trading model. It got a couple bad trades here a couple weeks ago, but as you can see, long exit, long, gave up profit, long, made a little bit of money, went long. You guys saw that video, right? And then it stopped out, and then it went short and got right out at the low last Friday. Monday, the system went net long. So that was, if you're looking at equities in terms of, I can't stand the market and I think it's going down. Well, here's a rule of thumb. If you come visit our trading room and you take that attitude, then don't be selling short until at least the trade system gets out of its long position. Does that make sense? So if you think that the market is going to go down and this system is still long and you think the stock's going down, well, just do yourself a favor. Don't sell until at the very least the system gets out of its long. It's not going to guarantee you a profit, but it'll surely help you, give you an edge that if this system says it's long the market, then you probably don't want to be selling right now as a momentum trader. If you think longer term the market's going to go down and you have powerful insights to that, then at least give yourself a little bit more time. Maybe you'll be right. But at this point in time, the irony is that the system is still long in the spider model. That was the initial stop. This is the maximum, let's call it emergency stop. This is a new trailing stop that initiated, and that's why I tweeted that out. Long story short, that was the new stop. Ironic, it did not get filled today. This is my volume tool. It's very unusual to see the market have a volume decay like this. Now it's probably explanatory because if you look here, you see sideways action in the S&Ps. Well, this is kind of a false image. And the reason it's a false image is simply it's not taking into account the valuation increase on the dividend. The spiders are going to have $1.30 some odd cent change addition to that 281.35 price that you see. That's a glitch. It should be higher in value right now. So the volume here, it's kind of a weird thing, and this is the weird stuff that happens through quadruple witching. A lot of traders don't take trades because system signals can be false, data can be corrupted, a lot of different things can happen during this time. But I just wanted you to see this is our new stop. That's what we've done in the market. This is the kind of information professional traders know, they use to their advantage, and you need to know about this too. We covered that in the live trading room. Now, today, we also did, let's review right over here. My TradeStation page is what we use for our algo room. That's the automatic system, and you can see the performance of those trades. Just one more time, I'll click on that. All right, so when traders come into the room, they see this page. And again, what they are looking at are the trades. There's the spider, there's the performance on the spider right here. This is the VIX, there's the VIX right there. You can see that we had the ECM is now flat. It's a 10-minute system. There it is. And there's the workspace, meaning we are only taking the trades that are on these pages right here, guys, ladies and gentlemen. All right, so if you're in the live trading room, this is what you see, and it was a pretty good week as people commented. Thank you. All right, the trades that we did today, it's kind of weird. We were up. We had a nice, let's take a look at AKAM Technologies. We're maximize the sell. So this is a 1-hour chart. We took a beautiful little pivot point, a person's pivot point. Let's get the drawing tool up and I'll show this for you. We took a long position based on a decent strategy. The relative strength was strong. There was good volume. And again, the market went up. But this morning, we were seeing signs of struggle here. The market had rallied. We had less than volume. We had the relative strength weakening. We cut the trade. That was it. And that was a nice, we did the best that we could for what that signal gave us. And we just said, it's time to exit that trade. So we exited out of AKAM Technologies. XOP, we took a long position here as well. So when we took a long position here, and then today we note, wait a minute, there's a problem here. We're starting to see a decay. We can't break out. You can see this line in the sand, this green line. We should have broken out. We didn't. I saw the market struggling, and we decided to pull the plug on XOP. So that's what that email was all about. Get out of XOP. We exited XOP. Get out of the AKAM Technologies. We did that. We still stayed with we have a short position at 121.45 is our average price, and on TLT, it's in a trading range. So we're not really, it's no harm, no foul. It's like being in the trade. right now at break even. So when it's in a trading range environment, the interesting aspect is that the volume analysis here suggests that this is a weakening trend. So we want to stay on the short side until proven wrong. We have stops in per our advisory service. By the way, we've done a lot of research work. Provide that in our live trading room. I want to share this with you. This red line in the sand is what we like to call it. If we see a daily close below that red line in the sand, and let me get this arrow tool here. So if the market fails off of this high, and you can see now that I've just drawn that in, there's a little trading range. The volume action is not very positive right now. And if we start to see a decay in the market, first if we get through the pivot, which is the pink line, and if we get through the monthly pivot support, which is that green line, if we close below that, I'm under the targeting this move back, minimum objective back to here, and then eventually maybe to 112. It all is going to hinge on that red line right there over the coming weeks. Seasonally, we look for bonds to break down, but with the strength in the stock market, we've yet to see this great sector rotation that people talked about for a long time, because people went flooding into bonds for safety, and they don't feel comfortable in equities because equity prices are elevated. But if people feel that there's better rates of return with a safer, less riskier exposure in equities, they're going to dump these bonds. And that is what we're looking for. All right. So that's why we have, from a technical perspective, that's what the tea leaves are showing me. And from a fundamental perspective, that's what I'm anticipating. So we dumped that. In the live trade room, we had a great setup, which we were talking about a breakout, and a lot of you guys took this trade. It was fabulous. We had a last conditional change that we were looking for a positive breakout, and we said if we do get that, then we're expecting to move back up to about the 383 number. Why did we say this? Real simple. We had a setup because the on-balance volume was rising, and today it was just absolutely perfect analysis, guys. And I'll share this with you. This is important for everyone that wants to learn to trade professionally, and rather than maybe get a hunch, look at the area in here between these two green zones. And when you look at the low that we established on at 12:30 on was that Tuesday after the news came out. And let me get more information in front of you. Listen, this is when the news came out about the crash in Ethiopia. But you see this up here, that sell signal right there? And let me draw a circle under that right now. Right there. Okay. That sell signal, look when that came. That's almost 2 weeks ago. Well before the crash. People were already selling Boeing before that crash. Like someone knew that the plane was going to crash a week before it did. I mean, think about it. 1, 2, 3, 4, 5, 6 trading days before the crash, before the news, 6 trading days, Boeing was selling off. Now, I'm not a conspiracy theorist, but there was a James Bond movie. If you recall, I think the villain was Sharif, who put a $100 million bet on put options, betting that a plane would blow up or crash. James Bond came and saved the day. Sharif loses his $100 million because the bonds, of course, the options expired worthless. End of story. Or I guess the story continued into other sequels of that James Bond series. Now, what I see is that there was kind of like the market already sold off ahead of that news with Boeing. And what happened is that we noted that there was volume coming in buying that dip. Look at the volume structure of the market. So what we said was, while this morning we opened lower one more time, I said, guys, ladies and gentlemen, the market's opening up into value where there were buyers. If the buyers defend that position and absorb more stock, look, the volume never, price got lower in close, but the volume did not. What does that show you? Bullish convergence. A volume bullish convergence is one of my signature setups that we would give, and we did. I said, wait for the market to show there's positive momentum by closing greater than a last conditional change, stuff that in that book 15 years ago. and we should see a rise to test this next line in the sand. That was a $7 quick day trade scalp. That was a beautiful trade for all our members. We had that completely covered head to toe first thing today, and we started coverage on that yesterday. Now, our other positions this week, we had a great little trade in Marley. We got out, it pulled back. So all the trades that I put out in the Twitter account, that's where we cover them in this room right here. So if you're a stock equity ETF trader and you're looking for information on when to act, this is the room for you. I would encourage you to try our trading room. I think you will find it's quite a different venue than what most people might be out there doing. Instead of looking at a quick day trade on an overall equity, like maybe from Boeing to a swing trade that we would be in. By the way, we picked up about 3.5% in AKAM Technologies. And for next week, you may have seen this tweet. I was talking about Wells Fargo and looking for a bullish bias breakout in Wells Fargo. Well, funny thing is, we didn't get the breakout. See the green line in the sand? It's still chop suey, kind of back and forth, but it's still bullish. It's holding its positive momentum. It closed greater than its daily pivot. It closed greater than a weekly pivot, and that shows an uptrend. Where can you find these tools? If you go to Studies, and you go to add a study, go find my name. It's John Person. I've got 3 indicators. That's right, I've got indicators on Thinkorswim in case you did not know that. Here they are. The PMC is a relative strength, very powerful tool. PPS, well, that's the one that shows those arrows pointing up for buy signals and down for sell signals. And then finally we have the person's pivot indicator, and that's the lines in the sand that gives us both trend direction as well as support and resistance lines. Lastly, I did put out one last tweet. I said Morgan Stanley, MS. We're looking for Morgan Stanley to pop. It was one of the stocks that had the strongest relative strength readings and in pretty much all the financials. And for that, I'm going to bring back into focus our trade station, which I do this in the live trading room. So let's take a look at what I'm referencing. This is important information to learn for stock traders to find out, because this is what really helps drive institutions' decisions, because maybe they have better information. I'm not saying inside trading information, but they might have better information. And if they do, their buying is going to be detected by the indicators that we've created. And that's how it's going to help you. If I can teach you, which I can, how to read these indicators, then it's going to give you an extremely powerful edge in the market. So the relative strength tool that I'm talking about is this person's market catcher, PMC. Let's take a look at, this is the financial ETF XLF. Let's take a look at the 2 that I was talking about. So first off, we're going to go to relative strength. I'm going to double click, and it's going to collate from weakest to strongest. So we have AIG. I'm not interested in AIG right now, even though it did have a buy signal and its relative strength is reading 7.05. We were focusing on Morgan Stanley. That's what we tweeted out yesterday. That's what I want to focus on right now. 3.88 reading, green moving average. Let's take a look what I'm talking about. Relative to the overall market, the relative strength, this is the PMC indicator, was improving. And this is a whole nother class, so we're just going to get right to the point. When the relative strength fires off positive and there's strong volume, you may look for a market to move up. And that's a nice, sharp move that broke out in Morgan Stanley today. Now, it's up 64 cents or 1.5%. All right, now, you need to learn about position sizing. How much equity do you put into a stock? Look at the terms of percent changes. So for this, we're going to correlate percent change and go from, here we go, low to high. We had Citi and we had second place Morgan Stanley. Out of all the big banks, Morgan Stanley was the strongest relative to the entire sector. Goldman Sachs, 0.4%. And what about our Wells Fargo? Well, it's not that bad. It was up 0.62%, outperforming the public's favorite, Bank America. I've kind of avoided Bank America. If you're a TradeStation user, on Mondays, the morning briefing on Mondays 2 weeks ago, I said, watch Wells Fargo. It's going to outperform Bank America, and it has. And that's with the CEO in front of, I don't know if you saw, check out C-SPAN. You got to look at some of those questions that he was fired off at. But the CEO of Wells Fargo was under the hot seat in the finance subcommittee of and Capitol Hill this past week. So anyway, with that said, he's through that. He's done it. And now we had liftoff. Today, the best performing sector in the stock market was indeed financials. So we had the semiconductor was strong. Biotech was strong. That what lifted the Qs. And then XLF right up here. It's green and it has a bright blue. So if we collate relative strength and say, what was the best performing sectors? Those are the ones that I want to go after. Well, UNG is natural gas. USO is crude oil. But technology, utilities, the Qs, semis, biotech, materials, and yeah, there it is, XLF. If we are going to see newer highs come into the equities, we want to see a few things happen. I want to see the transports recover, IYT, and it's the worst performing sector. So we need participation to increase in transportation, financial, and energy. And with technology behind us, who's to say we can't see new highs in the market? But for now, I just wanted to share with you our top-down approach in the market, what we look like, how we put it together, and why am I sending those tweets out? What are those tweets based on? This is the analysis, the style that we use, and this is why you need to be a part of our community. If you're a serious trader and you want to learn about trading, better position sizing, better awareness of what side of the market to be on, if you want to learn how to trade and be more specific in the sectors, then join our community. I look forward to having you. Until the next time, and I really do look forward to the next time we do this. I hope you have had a good week, number one, and number two, happy St. Patrick's Day to everyone. Thank you.